All right, I'm recording this now. Okay, so I just kind of briefly wanted to go over the pre-market analysis. I try to do this every now and then, and but there's been a lot going on, and there's a lot in this analysis that I kind of wanted to shed some light on. So, first thing here, we got to look at where we are, and let me zoom out on this. So, when I talk about these balance areas, balance is very important because it means that value is being built and price is being tested, and we see a lot of balance at new highs. So that's where we are. We made this new high and we're balancing. Balancing is a good sign. Now, what we typically see is a break of balance at some point. And so that's looking like what we're going to see today. You see the price right now is at the bottom, the very bottom of this balance area right here. So what this means is a break to the bottom of balance. We've already broken the overnight low, and let me zoom in on that so you can see what I'm talking about. So whenever we have a gap, and we typically have gap ups, so whenever I talk about gaps and I say gap and go or gap and crap, it's in the direction of the gap. So gap and go could be up or down depending on what direction the gap is. Today the gap is down. So what we do is we measure the overnight low on a gap down. We measure the overnight high on a gap up. And we use that as a reference point for direction. So already this morning we have taken out the overnight low. We have a new overnight low, and that new overnight low is below the bigger picture balance area that we're in. So that tells us that this morning, unless we can recover right off the bottom of this balance, then we will be entering the prior balance area, which is this bigger balance area, basically the range from last Monday. So that is from 376.77 down to 364.79. The rule basically goes when you have balance areas and when you break balance, when you break to the downside of balance, you need to look at, especially if there's a balance area that was directly before the one you're in right now, and tell me if that doesn't make a lot of sense. That's a lot of words there. But our previous balance area is right below the one we're in right now. It's right here. So the bottom of this balance area is 364.79. If we break the balance area we're in right now, which is up here, then our target, our ultimate target, should be the bottom of the prior balance area, 364.79. That's not going to happen today. I mean, if it did, that would be pretty dramatic. But that's the ultimate target. What we can target for today, using the fibs for all of this, is we can target a measured move. And what a measured move is, basically, I'm using the Fibonacci's here. 100% of the move here is from yesterday's close, 378.46, to the overnight low that we had, which we may need to change down to 376.31, since this morning we've broken the overnight low whenever I set up the analysis. And basically we would measure that down 100%, and so that puts your target at 374.77 right here. And that also lines up exactly with the fib line from the prior balance area, so that makes a lot of sense. 374.77 should be your target if we break to the bottom of this balance area. And so that was all in the analysis this morning. That's kind of my thinking on that. We've had, if you look at the balance area we're in right now, you've had several bounces off the bottom, but anytime price consistently tests an area, you can sort of expect that area to break. So with the overnight low, with it breaking the bottom of balance, it's looking like it's probably going to break to the downside. And what we also have on top of that, on the daily chart, is we have this 5MA starting to curl down into the 10, which is a dead cross on the daily. And yesterday's candle was an engulfing bearish candle. So the daily chart shows a pullback is coming. We know where the target is to know when that happens. That's the bottom of balance. And we know where the ultimate target is. So that gives us a really good scenario of where to go. If balance breaks, we need to target the bottom of that balance. Everything is pointing to the direction of a break in balance. If we get surprised and price holds at the bottom of this balance area, the only time we can really change our bias on that is if we get back into yesterday's range. Okay, so we need to be up here. We need to be up above in this area. Otherwise, buyers are going to take control as soon as this balance area breaks. I mean, sellers are going to take control. So that's it. That's all I wanted to go over here before the market opens. Anybody have any questions, let me know.
William, were you just doing it on balance or my usual reversion to the mean?
Well, the daily dead cross is your reversion to the mean there. So
I can see we got our fellow Brit in here, Ginger Robbie.
Oh, is he a Brit?
Hello? Yeah.
Oh boy.
Yeah. Hey, we got actually somebody that lives over here that sounds like they live over here, besides my wife.
Yeah. Well, close enough to Ireland, I suppose. Close enough.
Yeah. So the dead cross, William, basically on the theory of the reversion to the mean is we can go all the way down to 373 just to hit the daily 21. If we break it, 370.39 is your 34, and I would really expect to bounce there. I don't see anything bearish coming up, but I would really like a reversion to the mean just so we could get some fresh charting going.
Yeah, I don't think it's really bearish. I think it's just showing us in the short term what's going to happen. But we could either go sideways and let the 20 catch up, which it would take another week of doing that for the 20 to really catch up. Or the quicker way would be just to, like you say, revert to the mean, come down to the 20 and bounce back.
If you read my analysis from a couple days ago, I was going that I do believe we're probably just going to trend sideways with a bearish tone as the moving averages come up to revert to the mean. There's too much dip buying to get down there. Every time we start to go down there, dip buyers come in, we buy it up, and we're back up again.
Yep.
So we really need those moving averages to come up or price to come down. And it looks like it's going to be a tug of war until one side wins.
Yeah, well, overall tone is definitely bullish because with everything going on, we've still hit all-time highs. And it's not like we hit it and we pulled right back down. I mean, if it was bearish, we would have had this look above and a complete fail back on this past Friday. And so we dipped on Monday, which was expected because we were way off the averages, but then we went sideways. And so, and with everything else going on, that's pretty bullish. So a pullback, all it's going to do is just pull back to prices where there's more buyers and build another base to get back up higher.
Yeah, because we need that correction on the SPY. And if you look at the IWM, the SPY version of the Russell 2000, I mean, you got so much empty space below the 8 and 21 that literally this thing could come all the way back down to 195.22. So you're talking about a $20 drop on that, and it still maintain its bullishness.
Well, the Russell this morning is weaker than everything else, actually. So that, that would make sense. And the Russell could be the one to lead the charge because it's been charging higher and higher. The ES is, gap down a little bit weak, but the Russell's definitely a lot weaker.
Yeah. Now, somehow